నువ్వు టీమ్స్లో పెట్టుకో షేర్ చేసేసి నెంబర్ లక్ష్మి నెంబర్
లక్ష్మి నెంబర్
99595 44 959 పంపించేసి
ఫోన్ చేసి చెప్పు లింక్ ఇంకో నెంబర్ నుంచి మీకు వచ్చింది షేర్ చేయమంటున్నారు.
Hello, madam. Madam, it will not happen, it seems. We have shared just now from another number, my admin person number, link పంపించాను ఇప్పుడు లైవ్ పెట్టి చేస్తున్నా. దట్ విల్ ఓన్లీ హ్యాపెన్ దాని నుంచి అందరినీ జాయిన్ అయిపోయింది చెప్పండి మేడం ప్లీజ్. చూడండి ఒకటి ఆనంద్ అనే నెంబర్ నుంచి వచ్చి ఉంటుంది. అయ్యా ఒక్కసారి చూడండి మేడం ప్లీజ్.
యాక్చువల్లీ ఏంటంటే లైవ్ మనం లెటర్ షెడ్యూల్ చేయాలంటే స్ట్రీమింగ్ సాఫ్ట్వేర్ కొనుక్కోవాలి.
ఓకే, సో ఇప్పుడు ఏంటి ఇదంతా అయిపోయినట్టేనా?
చార్జర్ పడుతుందా ఏమన్నా?
ఉంది, ఫుల్ ఉంది. నేను ఇది చేయాలంటే
ఏం కావాలి,
షేర్ చేయాలనుకుంటే పీపీటీ షేర్ చేసి
ఓకే.
ఇప్పుడు నువ్వు కూడా లాగిన్ అయ్యి చూడు ఒకసారి. ఎందుకన్నా
నేను అక్కడికి వెళ్ళాను.
Now is it audible, sir? Shashidhar? Now? Yeah? Good then. Yeah. My video also clear, no? Everything is all right? Yeah, please confirm. I'll just have a call with the Lakshmi madam once, regular call, to check, and then we'll start. Hello, madam. Can you confirm? Ipudu? No, it is on only now. Yeah, I think it is okay, but please check once, and if you say yes, then I will start. Yeah. Yeah. I think everybody is saying in the chat box, yes, it seems. It looks good. Even I think my screen is shared, right? Can you see my screen, which is shared? Yeah. Okay then, done. Okay then, we'll start. Yeah. Okay, ma'am. Thank you. Bye. Yeah. Good evening, all. Good evening, all members. Yeah, I think hope everything is fine. It looks like. Yeah, we will start the today topic straight away. We'll jump into the topic. The today topic which we are going to discuss is about GSTR 9 and 9C class-wise analysis and important pointers, department issues and solutions. All the things we are going to discuss. My name is C.S. Subbareddy Bonam. I am partner in HNACO LLP, Hyderabad. Okay, yeah. Uh, so basically, the topic is so big, and we have time about 2 hours, and mostly we will cover every aspect of the 9 and 9C. And as I understand from the one of the members of the society, is that all of us, most of the participants or the attendees are practicing chartered accountants, is what I got to know, which means the entire session we will try to make it to appeal uh, to the chartered accountants who are practicing, who will help the clients in filing the GSTR 99C. So that is how we'll do. Yeah. So we'll start the session. Yeah. Before going to the steps and then parts of the GSTR 99C, we'll just understand what is that GSTR 9 and 9C, basically annual returns, which we will just understand the statutory function and then management report. This kind of a small introduction we will give, and from there we will go to the class-wise and table-wise analysis of the GSTR 9 and then later GSTR 9C. Okay. Yeah. The first one is, what is this GSTR 99C? GSTR 9 is basically annual return. What is this annual return? Annual return is simply that whatever returns we filed, GSTR 1, GSTR 3B, all the things summation, basically consolidation of the entire details which we filed in GSTR 1 and 3B for the financial year 23-24 year, and that will be consolidation and will be given in GSTR 9. That is called annual returns. I think somebody says full screen. I'm not sure how to do. I'll just see. How to do. From view. Can anybody put sir full screen? How to put on the top? Huh? Okay. Now is it okay, sir? Control F7. No, I think sir, no. I could not able to do. Can you please put control view tab? Where is that view tab, sir? Sir, this is the challenge for all the chartered accountants, where most of the time, at least like me, where this tech related aspect is challenging little bit. I'm not very sure. Slideshow. Next to review. View. I'm not very sure how to do this. Sorry, I think slide show from current slide. Can you confirm, sir? Now is it okay now? Yeah. Is this slide show I did, sir? I did that slide show thing. Can you confirm? Please do it again. From beginning. Madam, yes. Yeah. Hello, madam. Huh? Where current slide? Yeah, slide show is there. I can see from current slide from beginning I put just now. Can you see now? I did that. No. Maybe reshare I'll do then. Stop sharing and then reshare. Possibly it may come. Can you tell sir now? Is it yeah? Yes, sir. Okay. Thank you. Thank you so much. I think we have lost almost 5 minutes time. Yeah. Now fine. Yeah, good. Thank you. Yeah, so basically GSTR 9 is about the consolidation of all returns we filed, and that the entire data and everything has to be disclosed in GSTR 9 and 9C and accordingly filed. And for that, what is that? Taxpayers need not file annual return and GSTR 9 and 9A for 22 23 24 if the aggregate turnover, aggregate annual turnover is up to 2 crores. This is not required to be filed. If it is more than 2 crores and up to 5 crores, then GSTR 9 is mandatory. 9 is not a mandatory. It is optional up to 5 crores. Once that turnover is more than 5 crores, aggregate annual turnover. Basically, what is this aggregate annual turnover? This aggregate annual turnover is about the pan India basis, all states together, all types of revenues, exempt, taxable, every turnover, every revenue has to be included for the 5 crores purpose, including all states turnover together. If that is more than 5 crores, then only 9C becomes mandatory. Okay, once this is done, though now we all know that 9C is not a statutory requirement. For the first 3 years, this used to be mandatory, and that has been removed, meaning previously as a CA and CMA practicing chart accountant or cost accountants used to certify the 9C reconciliation statement. That state certification is now not relevant now, which has been removed, which means it is only self-certification. Because it is a self-certification, and we are doing as a consultant to clients the 9 and 9C filing work we are doing, then we have to give one report like management kind of a report, like internal audit kind of a report for the GST 990 purpose, where all the reconciliations, reasons for variances, additional liability, all the things we'll discuss. Okay, later I'm just giving a thought on this, that's all. And then later we are going to discuss every aspect of the reconciliation, what are all the things which we have to take care while doing the GSTR 9 and 9C. Okay, yeah. So there are important reconciliations has to be done. All these reconciliations, which we are going to discuss little later over the course of our session, which we are going to discuss turnover related audited financial statements versus table 5A, basically return related, and table 5N means total turnover versus table 7 HSN related summary, and then outward taxes, liability books versus 3B versus returns and workings. All the reconciliations has to happen. And after that only 9 and 9C filling and filing work we should start. Before that, all the reconciliations, all the types of reconciliation has to be done very carefully. All the things which we are going to discuss later, what are all the reconciliations which we are going to maintain. Okay, so once that is done, the basic structure of GSTR 9 we'll discuss. Okay, and first of all, for GSTR 9 and 9C, the last date for the financial year 22-23 is 31st December 2024, which means we have hardly almost 2 weeks, 3 weeks we have time. Okay, so 31st December is the last date, and there is no extension which is expected, because even the last 2 years also they did not extended this date, which means this year also they are not going to extend, which means we have time about 3 weeks time to file all 9 and 9Cs of our all clients. That is the important aspect which we have to remember. If it is not done within that time, then penalties which will be applicable, which what are all the penalties and all, which we are going to discuss little later in the course of the session. Okay, the structure, the anatomy of GSTR 9 annual return is basically, it is having 6 parts. GSTR 9 is having 6 parts. Part 1, 2, 3, 4, 5, and 6. And in the part 1 is basic information, table 1, 2, 3, and what are all the things also will be basic, like company name, GST number and all. And part 2 is about outward supply, table 4 to 5. 4 is like outward supply with taxes plus RCM. Table 5 is about outward supply without taxes aspect. Okay, and then part 3 is about ITC details. Table 6 to 8 tables are there, which are covering part 3 ITC related details. And then part 4 is about details of taxes paid, taxes payable versus paid, that is table 9. And then part 5, transactions of previous financial year disclosed in current financial year, table 10 to 14. Okay, and then part 6, other information, table 15 to 19. Okay, so all these things, these are the parts and tables which are there in GSTR 9, every aspect of the table, and we are going to discuss now. So before going to the tables, specific explanation about the tables, there are recent updates which are important to note. Those are table 4G1, and which is with respect to e-commerce related aspect, and then table 5C1, which is also e-commerce related aspect only, and then that's all it is. And table 8A, previously it used to be 2A figures, GSTR 2A figures it used to take. Now it is 2B figures, GSTR 2B figures, it is auto population is happening. Okay, that those are the recent updates with respect to current last year 23-24 9 and 9C while filing. These are the recent updates which were not there previously, which are important to consider for this 9 and 9C. Okay, yeah, we'll straight away jump into the table 4. Okay, yeah, anywhere, anytime, if at all voice is not clear, video is not proper or anything, please put your response in the chat box so that I'll understand. Yeah, so with that, we'll just go into the table 4. Table 4, outward tax with outward supplies with tax plus RCM. So I have given every aspect of the tables here from A to N and everything, table 4, and I've given I've given short kind of a consideration points, so that if you can consider those right hand side aspects, you can easily fill the figures and the tables in the table 4. For our ready reference only, I've given both the ways. Table reference is in left side, and then right side is little explanation to with respect to the tables in the table 4. Every table in a similar fashion I have given, and this entire PPT will be shared. Yes, somebody asked Naresh, and this PPT will be shared with all the members, which you can refer later point of time. Don't try to read the PPT, just try to understand what we are going to discuss. And the time is less for us, but anyway, I will touch upon the important aspects wherever we do general errors, common errors, mistakes, and all while filing and filling GSTR 9 and 9C. Okay, yeah, the first table, table 4A, supplies made to unregistered person, B2C, which we know that. And then this table 4A is the B2C net of credit note and debit note. Okay, and table 4B, C, D, E. Okay, and then I, J, all are all the things which will not cover in 4A, because 4A is about B2C and 4B about B2B, supplies made to registered person, and then that will come, and zero rated supply on payment of tax. This table 4, what we are talking about, outward supplies with tax, right? That is the reason zero rated supply, SEZ supplies with payment related aspects only will come in table 4, and without payment of tax aspects, SEZ and zero rated supply and everything will come in table 5, not in 4. That is what we should remember. And then once after that, for B2, B, D, B, C, D, E, F, E, and then I, J. All these aspects we have to verify as a consultant, as a practicing chartered accountant, or maybe an employee of the company who are responsible to file GSTR 9. We have to verify these figures which will come in 4B, C, D, E, I, and J. These aspects we have to verify with e-invoices raised or not. Okay, from there also you can get information according to this, so that you can properly fill these figures into these sub tables which I have referred to. And then once that is done, I and J, credit notes, debit note accounted and disclosed in current year only has to be done. IJ, if you see 4I and 4J, which says credit notes issued in respect of transactions specified in B2E, okay, which will be treated as a minus figure above. Okay, B2E, all the things has to be credit note with respect to B2E. All the things has to be put in 4I. 4A it will not cover, because which is already net of credit note, debit note. Okay, that is unregistered related B2C aspects of the supplies. Okay, that has to be properly taken care. Once that is done, yeah, 4F, this is very important, where advances on which tax has been, all these things, okay, 4C, zero rated supply on payment of tax, 4D, supplies to SEZ on payment of tax, okay. And 4E is deemed exports, and then 4F, which is important, advances on which tax has been paid, but invoice has not been issued, not covered in A to E above. Those advances related aspects has to be kept in this 4F. Okay, for this advances related, where all these things will applicable only to services aspects. Okay, taxes has been paid for what? Wherever advances are there on which GST has been paid with respect to service only will cover in this place, because on the goods advances with respect to goods, taxes will not be paid, right? So that is the reason 4F is important table. Okay, and then 4G is inward supplies on which tax has been paid on reverse charge basis. Okay, all these things already covered. And 4K and then 4L, all the supplies tax declared through amendments, plus minus, everything will come in this place. And one of the 4G1, which is the new table, new subtable, which has been added in table 4, which is with respect to supplies on which e-commerce operator is required to pay tax as per section 9(5). Okay, like 4G, wherever inward supplies on which tax is paid by the supplier who is filing GSTR 990, right? So those things will come under 4G, right? In the similar way, wherever the supplier is having, example I'll give you in this case, where e-commerce operator turnover is there, right? Example, there is one hotel is there, accommodation, one 5-star hotel is there. Yeah, they are giving rental. One walk-in kind of a booking will happen, and also like Oyo or some other place, Make My Trip, these kind of a e-commerce operator also customer may come. So wherever the customer comes directly to our site, our inquiry and walk-ins kind of a bookings, for that anyway which will come under 4A or B, whatever the case may be, B2B, B2C aspects and all. And wherever this e-commerce, Make My Trip, booking.com, these kind of a customer comes from that site, then those things will be coming under 4G1, where the e-commerce operator will pay taxes, not by us. That is the reason they've had it recently, that 4G1. Oh, with this, and then later 4N will come. It is only total of the table 4. And table 4 is all tables are mandatory. All mandatory tables only in table 4. Okay. Yeah. So once after completing the doubts and all, I think Sri Hari is asking doubt. I'm sorry, sir. I think we will all the doubts will be cleared in the end. If at all we don't have time or whatever the reason we are not able to answer it, and I will give my mail ID also, because once starting this doubts, this kind of a one to specific doubts, and we may not be able to complete the entire session. That is the reason to respect the other members and to cover the entire aspects of the GSTR 999C aspects. So that is the only reason, sir. Otherwise, these answers also will be given later. And my mail ID I will give. We will answer everything if time is not permitting today. So, but answers will be given in the next one day. I'm sorry for that, but I'm just going ahead for the next slide. Yeah. But I hope you understand. I am giving just a broad understanding of the table 4 I've given, and now we will go for table 5. Outward tax without taxes. Outward supplies without taxes. This table will be. And in the first table 4, we talked about the outward supplies with taxes. That is the reason, if you see 4B, C, D and all, where with payment of tax, SEZ supplies, with payment of tax, export supplies, all the things are there. Now in this table 5, where they want to understand what are all the supplies on which you are not going to pay taxes, that they want information. That is the reason table 5 came into picture, basically. Okay. So table 5A is about zero rated supply with export without payment of tax, where LUT will be there, right? That is the reason zero rated supply without payment tax will be there. SEZ supplies without payment of tax, supplies on which tax has been paid by the recipient on reverse charge basis. He paid, then you will not pay. That is the reason this this column comes in table 5. Similar way, 5C1 also, like for e-commerce operator purpose, this is. And then 5D will be exempted supplies, 5E will be nil rated supply, 5F will be non-GST supplies, like no supplies which you can get from which are supplies which are falling under schedule 3 items, basically. Okay, 5F will be schedule 3 items. And then HI will be credit notes and debit notes, plus or minus, like similar way which are there in table 4. On which tax is impact not there. Those things only will come under table 5. Tax, wherever tax impact is there, credit note, debit note and all, which will come under table 4. If tax impact not there, then only will come in table 5. Yeah. So through amendments and all, plus or minus, everything is there here. And all the aspects which I've explained in left side column of the tables, which are there in the GSTR 9 columns, and I've given little explanation also in right side of the PPT presentation. Okay, you can refer. Yeah. So I am going little fast here, 4 and 5 tables, because those things are, most of the things are shorted. Everything will come automatically. The workings, based on the workings, 3B, everything is almost, I think, easy only. That is the reason I've gone little faster. And then wherever important, including yesterday guidance note also, I will explain little later. And wherever important aspects where confusion will be there, those things we will go in depth of the explanation. Okay. So with that, I've just given ITC reconciliation aspects. So because the next tables will be ITC, table 6 will be ITC related aspects, which is more complicated, and having most of the people having doubts in this table 6 only. That is the reason 6 and 8 basically. Table 6 and 8 are very important tables, and most of the consultants and the whoever filing the associates who are filing the GSTR and 99C is having doubts in table 6 and 8. So for those tables, we'll clearly explain every aspect of the subtables in table 6 and 8 in depth. Okay. Before going to that ITC tables, I've just given some scenarios here where ITC, of late we know that, right? So 2B is mandatory, and then some people are only taking 2B, and they may be ignoring, so most of the time ignoring the books ITC itself, books input ledgers in the books, they are ignoring. Just anyway, it is 2B mandatory now. I will take entire ITC from 2B and disclose everything in 3B and close the file, the return. That is how some clients, some associates are doing. That is wrong. Only 2B you can't go. Only books also you can't do, and ignoring 2B also not possible. You can't do that. And the ideal practice, appropriate process will be, we have to claim the ITC as per books after matching with 2B. Then only this invoice level reconciliation has to happen, and then 9C easy matching, everything will happen. So only 2B following will not serve the purpose. It will create problems. 9C mismatching or the reconciliation challenges will come. Only following books, ignoring the 2B also problem, because it is a contravention of law. And table 8 will come where you have to provide some more details with respect to 2B and all. And that is the reason we have to recommend, we have to ensure all the associates who are liable to file, for whomsoever GSTR 9 and 9C is applicable, they have to claim the ITC as per books after matching with 2B. That is the appropriate process. Okay, and having following the ITC data, invoice level, eligible ITC claimed obviously can be identified. Permanent ITC reversal, where whether shown in 4B1, in 3B, GSTR 3B, 4B1, permanent reversal, and then temporary reversal disclosure. ITC of GSTR 2B not relevant to the customer, where it may be not related to the client or the assessee, maybe might have given GST number, which may be coming and sitting in our 2B. That may be error. So all these aspects has to be removed, and then reconcile the books, and then file GSTR 9 and 9C. And all these things might have happened already. By the time we are in December, now we want to file the GSTR and 9C. These entire aspects might have completed. 3B aspects, permanent, temporary reversal, and everything. But now, at least now we should reconcile those aspects, and accordingly, if at all any ineligible ITCs are not related to the assessee related ITC, permanent, temporary reversal, permanent reversal, all the things has to be getting the rectification done now, and reconcile and maintain those reconciliations, and accordingly give the liability sheet after reconciliations with respect to ITC and everything to the client, and then ask for the extra payment if at all anything to be paid, and reversal to be made has to be done through DRC 03 and all, and then only file the GSTR 9 and 9C. Because don't consider that there is no certification required from CA or CMA. That is not the intention. even though the certification is not there, CA or CMA is not required to certify this 9 and 9C. Even then, the reconciliations, the liability sheet, the review, the verification aspect which has to happen, all the things has to be done now, and then has to be shared with the client in the form of management report or whatever the name you call, and accordingly file the GSTR 9 and 9C. Then only we should file. Okay, otherwise the notices will come. Then again, the associates and clients will blame on the consultant only. That is the reason we have to be very strict now only while filing GSTR 9 and 9C. Okay, yeah. So with that, I'll go to the ITC table, which is very important table and most complicated and most confusing table. And even yesterday also, guidance note also gave some confusions in this. One thing which I can say now, the yesterday, I think yesterday only, no? Yeah, yesterday only that guidance note came with respect to permanent, temporary reversal, reclaimed ITC, and everything they mentioned about the tables about 6B, and then 8B things. For now, please ignore guidance note, which is giving wrong answers, which is not unnecessarily confusion. We are going to get confused with the guidance note, except that last fifth point which they want to clarify, which they have mentioned little bit okay kind of a disclosure, but all the four aspects of the above, first 1 to 4 is somewhere those are not proper disclosures which they recommended. Try to ignore those recommendations except fifth one. Okay, what is that and all we'll discuss. Okay, what way of disclosure we will discuss, not a problem. But ignore that. It is confusing and there are some issues also in that. That we'll go to the table inwards of ITC claimed related aspects. 6A. 6A is auto populated. It cannot be added. Total amount of input tax credit availed through form 3B. Sum total of 4A of 3B. This is auto populated. We can't edit anything on this. 6A is auto populated. And then from 6B to B, C, D, E, all the things which we are going to fill, and all the things bifurcation into inputs and capital goods has to happen. Okay, that bifurcation with respect to input and ITC with respect to inputs, ITC with respect to capital goods, that bifurcation has to happen. So now we'll go to 6B, inward supplies. Okay, inward supplies other than imports and inward supplies liable to reverse charge, which will come later. So that is the reason inward supplies. In this 6B, all the separation, bifurcation, inputs, capital goods, and everything has to be given. Okay, and then C will be 6C will be inward supplies received from unregistered person liable to reverse charge, on which tax is paid. Okay, it's like unregistered person reverse charge with aspects, inward supplies from unregistered person where reverse charge GST has been paid under RCM and ITC availed. Those aspects. 6D will be from registered person reverse charge and ITC has been taken. So those are the two different tables which they gave. 6B. Here some of the important aspects which we have to remember is that while disclosing the details in 6B after bifurcation into inputs and capital goods, wherever reclaimed ITC, where example, where the first time you have taken temporary permanent reversal and all, temporary reversal example in temporary reversal in 3B, where you have taken once, and then later in the next month reversal has been done, and later after the financial year completed, then you have again taken back. In those cases, now as per that guidance note, what they are trying to say, example 23-24 year, one ITC has been taken in 1 month, example in the month of March, and the same has been April month, February month has been taken example, and the same has been temporarily reversed in February and taken in March month. But at the same, in that case, what happens? And at this that value later it came in to be of the next financial year. In that case, what is that guidance note is saying? You disclose that in 8C. So that is not required. Ignore that. Here in this case only, what we can do, in the table 6A, auto-populated ITC will come now. In the 6B, once only you take. Because in table 6A, 2 times it might have appeared. Because at the time of initial time, and the invoice time, where it happened, it came in 2B, and later temporary reversal we did because of the goods not received or whatever reason, service not received, and then later we might have taken. So that is the reason in table 6A, it will come in the same financial year 2 times. One at the time of invoice month, where as per 2B, and second time where we have reversed and taken back, that month also it will come. So in that case, what we should do in 6B, because 6A you can't change anything, then 6B will go. 6B may you take only once. That is what guidance note in table point number 5 they gave. Only 6B you include only once. If you disclose according to that, then there is a difference which will come in table 8. And as of now, based on that guidance note, if you disclose only once in 6B, then the difference will come in table 8. And as per that guidance note, you ignore the difference, whatever comes, let it be. That is what the recommendation as of now. Otherwise, I have previously, previous years and all, last year, I used to disclose those figures once in 6B and then go into table 8M, disclose there, okay, sorry, 6M, any other ITC. Okay, then accordingly table 8 may there you will not get any difference. That is how I used to disclose last year. Now because we got the guidance note and we have to disclose in 6B only once, and then difference will come in table 8, and let it go. The difference like that only is what is the guidance note which is talking about. What is that 8 table and all, which we are going to discuss little later. So don't worry on that aspect. So hope you understood what is that I'm trying to say in 6A, 6B, 6C. Anyway, it is with respect to unregistered persons reverse charge aspect, and 6D is about registered persons and reverse charge paid and taken ITC. What is C covers? Basically unregistered persons liable to reverse charge on which tax is paid, like advocates. Possibly advocates are not registered and reverse charge is there, on that you paid reverse charge and taken ITC also. That kind of aspects may falling under 6C. 6D will be registered people, but reverse charge is applicable on those notified services. That reverse charge notification is there now, right? So those notified services on which tax paid under reverse charge and ITC has been taken, those things will be disclosed in 6D. And then E, import of goods related aspects, which will disclose in 6E. Okay. Yeah, so table 6 again 6F, import of services information which will be given in 6F. 6G will be ITC reversed from received from ISD. 6H will be amount of ITC reclaimed. Here also 6H is there, which is confusing, where they also mentioned in the guidance note at one place. Yeah, it is reclaimed ITC will be disclosed in 6H. Reversal and reclaim in different years, then only you will disclose in 6H. And again you have table 13 also. There again I will mention what is that table 13 with respect to reclaimed later year, not in the current financial year. And then table K and L of 6K, 6L, now it is not not relevant basically. And then any other ITC, but not specified above, 6M will be there. So once that is done, which I have given in this slide, you can see this Anyway, later you can also refer this slide. In this slide, I have given with respect those things which already I have given in my PPT. Most of the aspects basically covered in the guidance note also, but that guidance note is having little confusing disclosure or the recommendations. That is the reason I have given in this slide what preferably can be disclosed, what correctly to be disclosed aspects I have given in this slide. You can refer later also, and you can compare this to with the guidance note and then see whether it is okay or not. Okay, I think some volume disruption or something is happening. Yeah, please confirm, sir. I think it should be okay now. My network and everything is all right as of now. Please confirm, sir. One more time, Amit. Yeah, so this slide you can use and compare with the guidance note. That is what I was referring to, and see what is the best and correct way of disclosing those figures in GSTR 9. So once that is done, table 7 is there. As of now, table 7 is the optional. All the fields are optional. Table 7A, B, C, D, E, F, G, except H. H is other reversal. Please specify where that is only mandatory column in table 7. All the things you can disclose in 7H only. But I recommend 42, 43 rule 42, 43, where what is that 42, 43 reversals? Those are like where common inputs and input services used both for taxable and exempted supplies, ITC eligible to the extent of taxable supplies only. Turnover with respect to taxable supplies proportionately only eligible. With respect to exempted supply, that ITC, common ITC, proportionate to the exempted supply has to be reversed. That is what is basically is there in rule 42 and 43. So I recommend, if you have the information, everything properly, then I recommend with respect to those two columns C and D, disclose separately. Why? Because last two couple of years, department, whenever you disclose everything in 7H others, and then they are treating everything, even though you don't have any exempt supplies, sometimes you may be having like no supplies or schedule 3 items. For those things, you are not required to reverse any common ITC also, right? For those cases also, because I don't have any information you mentioned in 9 and 9, GSTR 9, specifically in 42, 43, I will treat the entire ITC or the turnover based on the turnovers which we disclosed in table table 4 and 5, that exempted, taxable, everything, and they're giving notices to reverse on everything. Okay, notices they are accordingly giving. So that is the reason, if you have the information, please accordingly fill this 7 table 7 also, all the tables. If it is uh, if you don't have, then all are optional anyway. You can go to 7H. And then table 8. So table 8 is again very important table, where which is also, it's like an information only, ITC reconciliation and information. Based on this table also, department people are giving notices, reconciliation differences notice and everything, but it is mandatory. All tables are mandatory in table 8. And now we will discuss about table 8. Now first one is table 8A and B. So those two are auto populated. 8B will be sum total of 6B and H. What is 6B? 6B is that ITC details which we have given inputs and capital goods wise details, right, separately. So those details plus 6H means reclaimed 1 second, sorry. Yeah, so those things will come auto populated. 6A, 8A and B auto populated. 8A will be like which will come from 2B basically. For the last year, it used to be 2A figure. Now it is 2B figure basically. And then B will be 6B and 6H. C, 8C will be ITC on inward supplies, particulars of the transactions for the financial year declared in return for the next financial till specified period. What is the specified period? ITC ITC on inward supplies. ITC, sorry, yeah, 8C inward supplies on particularly, yeah, for the last 23-24 year aspects, those ITC taken in next financial year means 24-25 up to November, right? That is the thing which they are going to, which they are referring to. Specified till the specified period means till 30th November you can take it, right? So that is what they are referring to. Last year related ITC taken in the next year. And then 8D will be difference A minus B plus C, and then ITC available but not availed, and 8F will be ITC available but ineligible, and then 8G will be IGST paid on import of goods. Yeah, wherever whenever you import the goods, where we will pay GST, right? IGST on the import of goods, that amount which we will mention here, and then IGST credit availed on import of goods. That is what 8H, and then difference will be G minus H, and then J will be ITC available but not availed on import of goods, and then K will be total ITC to be lapsed in current financial year. So basically in this entire table, what is that information he is trying to take? He is trying to do two kinds of reconciliations. One is reconcile this ITCs from your table 6 to be related aspects of ITC. Once that is done, then he is trying to see import related, and then ITC available but not availed. Basically, he want to know what is the total ITC which is going to be lapsed. That is what this table will give in toto basically. But that does not mean, because you mentioned based on these reconciliations, based on the tables and everything, okay, you, that does not mean this has to be, this will be reduced from your credit ledger. That is not the case. Okay, so but it is just a information purpose, but we have to ensure that, try to make it, if it is lapse is there, try to disclose. If it is no lapse is there, don't try to make it matching. So once this is done, so we will go to the table 9 of the GSTR 9, that is tax payable versus paid. In this, all are actually freezed only. Entire tax payable auto populated. Tax payable only column which is editable. If you see that tax payable versus paid table, only tax payable is editable. All other auto populated only. You can't edit anything. If at all, what is the reason for the differences I have given here below? Okay, possible reasons will be actual additional liability considered, pay through DRC03. If at all any additional liability which is there based on the all the reconciliation, the work we did till now while filing GSTR and 999C, those additional liability that will be payable, may you will disclose. Paid it will not come, but that is the reason you will pay through DRC03. Previous year liability disclosed in 3B of the current tax period, excess tax paid in current year, adjusted in the next year. These could be the reasons for differences in tax payable versus paid. Okay, yeah, I've given some tips also here. Additional interest, if at all anything is that has to be paid. Verify time of supply. Negative values, if at all anything is there in table 4C of GSTR 3B will result in payment of taxes here. So like that, all the things you can consider while filling this table 9 of the tax payable versus paid. And one more thing, if you refer to the instructions in the annual returns GSTR 9, there it will say DRC03 payment can only be done through cash only. If at all any payment or any additional liability come and we want to pay, that has to be paid only through cash only. That is what the instruction says. But you can do through ITC also. That is allowed. And even that site, if you log in and then see that where in the annual return portion, even DRC president allows the utilization of ITC also allowed, and there's no problem also. It's not that whatever additional liability which is there, it has to be paid through cash only. That is not the mandatory requirement, though instruction says so. Okay. Yeah, the next tables will be table 10 to 14 items considered in next financial year. So one thing is very important. It is part 5, particulars of the transactions for the financial year declared in the returns of the next financial year till specified period, till that November 30th November date, whatever we do last month return where we filed, right, October month return filed in the month of November 20th, right? So till that time, whatever transactions which we did, whatever the effects which we did for the previous year, 23-24 year related aspects done in 24-25, yes. So those things has to be disclosed in table 10, 11, 12, 13, 14. And in this case, only 10 and 11 are mandatory. 12, 13 are optional. Don't fill these things in 12 and 13, because again it will have a problem in your what already we discussed, right? 6B, where we said you disclose only once, or this kind of aspects are there. Try to avoid these things. If at all you have the data properly, everything in clearly you have, then you can disclose. As of now, it is optional, but because it is optional, you can skip this. But if you have the data properly to match with your financials and then whatever based on your returns and all, with that amendments and everything, you can disclose these things. Okay. Yeah. So that's what it is. So I've given some scenarios also, spillover related aspects. You can refer later. What I think most of the things already discussed, we've discussed in the tables, which we'll cover, but still I've given reasons and impact and everything. 3 scenarios I've given. One is outward supply point of view, and then credit note raised previous year, and then happened in the year of 22, 23, 23, 24, but actually shown in 22, 23, like that. I've given scenarios, spillover transactions, for the last year to this year to next year, everything I've given in 3 scenarios. Outward supply 1 scenario, credit note 1 scenario, liability related 1 scenario. While after sharing this PPT, you can refer and understand what are all the reason and impact how I've given here. Okay. Yeah, that's all in this. Otherwise, already we covered excess law, short, everything I've given there. Okay. Yeah. So with this, we'll go to the tables 15 and 16. Both are optional. It is like an information only, like a refund. 15 is about refund, sanctioned, rejected, pending, demand of taxes, total taxes paid in respect of E, and then demands pending out of E and all. So as of now, it is optional. Try to skip this for this year. 16 also same. And one important table in the 9, other than that everything we've covered, that is table 17. 17, 18 both are there. HSN details of outward and inward related, and then 17 is mandatory. HSN details of outward supply related aspects. 18 is inward related aspects, which are optional. Now ignore that as of now, or maybe you can skip for this year. Because again, you know that HSN details, giving HSN details for the inward supplies becomes very tough. And I understood that as per, yeah, anyway, we'll cover in the 9C, GSTR 9C type. What is that? Income tax aspect point of view, that disclosure used to be there, is there now. So expenditure details also. That way, giving HSN details for the expenditure or the inward related becomes very difficult, or even we may be not having the HSN details for the inward supplies also, most of the cases. That is the reason for this year, because it is optional, it can be ignored, this table 18. Table 17 is mandatory. That 17 is about outward supply HSN details. Okay. Yeah, so that 4-digit HSN up to 5 crores. If it is more than 5 crores, 6-digit is mandatory. So once that is done, entire table with respect to GSTR 9, all tables are completed, and the penalties which we are going to discuss now. Late fee payable and paid for annual returns to be disclosed if filed beyond the due date, 31st December. Yeah. So aggregate annual turnover is less than 5 crores, then 25 rupees plus 25 rupees, 50 rupees C plus S, subject to maximum of 0.04% of turnover. If the aggregate annual turnover is in between 5 to 20 crores, then 100 rupees, 50-50 per day, subject to maximum of 0.04% of turnover. And if it is more than 20 crores, 200 rupees per day, C plus S, subjected to maximum of 0.5% of turnover. Okay. And one more important aspect here is that is this late filing fee is applicable only for GSTR 9 or 9C also, or it is applicable for both. But if you see the section 44 includes reconciliation statement, also includes that annual returns including reconciliation statements. That is how section 44 says. If either one is delayed, late fee could be demanded, but only 9C delay fee is not disputable. Fee, whatever they are asking, it can be disputable. And then there is a Kerala High Court judgment also I have included here. I am referring here. Anisha Chandrakant, Kerala High Court, where 9C related to late fee can be linked to general penalty but cannot impose GSTR 9 late fee again. So that is one judgment which we can refer. Late fee for, okay, all the things are already covered. So with that, departmental issues and solutions, the next slide which I have given, most of the aspects mismatch with respect to table 6, 9, 8D, 8, all the things which we have already given. And one of the above slides also I have given little summary also there, comparing with your yesterday guidance note also. You can compare later. So this is already covered. And yeah, later you can refer after sharing this presentation. Yeah, so with that, I've completed GSTR 9, all the tables and everything with respect to GSTR 9, and possible issues, possible confusions with respect to table 6 and then table 8, all the aspects, and what are all the optional tables and mandatory tables, and everything has been discussed till now. So once that is done, we can go to hope everybody understood. If still any doubts or issues or any confusion is there, I will give in the end my mail ID, and then you can call to that mail ID. You can send mail also to that, so that we will reply later with respect to GSTR 9. So yes, so we will go to the next part of the session, that is GSTR 9C. Yeah. So again, GSTR 9C. 9 is about annual return, which is a consolidation of last year transactions. Everything happened for 23, 24. Everything will be disclosed in GSTR 9. That is what annual return that we've discussed just now and completed the discussion. And then next will be in the section 44. It said no, along with the annual return, reconciliation statement also has to be filled and filed. Okay, it has to be uploaded. So now what is this GSTR 9C? 9C is about reconciliation statement. It is not a return, it is a statement. For this also, the due date will be 31st December 2024. Extension is not expected for this also. And then one thing we should remember, which already we covered in the beginning itself, that section 35.5 has been omitted, which means audit by CRCMA is not there now. So which means there is no statutory requirement to get the GST returns or the annual returns or the reconciliation statement to get audited, so by the CRCMA, which means it is just a self-certification by the assessee or the taxpayer. So with this small background, we can go for the discussion of GSTR 9C. Yeah. So GSTR 9C is having again 5 parts, part 1 to 5, and then part 1 is having basic information, and part 2 is about turnover reconciliation, gross turnover basically, and all the other turnovers also, turnover related reconciliations, and part 3 is about tax paid reconciliation, table 9 to 11, and then part 5 is about ITC reconciliation table 12 to 16, and part 5 is about additional liability. Okay, so we will discuss little later what are all the optional here, also optional tables and everything. Okay, yeah, so some of the relaxations are continued. Table 5, all mandatory tables except one table, that is 5B. We will discuss what is that 5B. Okay, and then table 5G redundant. Obviously we know that April 17 to June 17, which is with respect to service tax, central excise, VAT related period. After that, from 1st July 17 onwards, GST came, right? So though they are still continuing that 5G, which is redundant anyway, and then table 12B 12C mandatory now, optional until financial year 21-22. This we will discuss 12B and 12C, books versus uh, booked in the current financial year and taken in the next financial year, something like that. So those things we will discuss when the table 12B and 12C in the later portion of the presentation. Table 14, that is what I think I was referring to with respect to table 18 of the GSTR 9, where I was referring to HSN details of the inward supplies. That becomes very difficult, right? So you can skip, because that is optional as of now. Again, in table 14 of the GSTR 9C, also optional, data available from 3CD clause 44 of under income tax. Yeah, which you all know. So with this, we will straight away going into the detailings of the GSTR 9C tables. Okay, while explaining this GSTR 9C, what I did in the presentation, little different way I've given. If you see the GSTR 9 tables, I've given left side the tables given in the format, and right side is about the little explanation towards the GSTR 9 of the tables. But in the GSTR 9C, I have given as it is exactly how it looks the utility. That is how we are going to discuss the later portion of the GSTR 9C format. So if you see the part A, which we discussed, basic in details. Yeah, okay. So yeah, so basic details is about GSTN number, financial year, legal name, trade name, name of that, if you are liable to get audited under any act. All these things are basic details of the GSTR 9C format. And then part 2 will be reconciliation of turnover. This is very important. In terms of GSTR 9C, table 5, reconciliation of turnover declared in audited financial statements with turnover declared in annual returns, GSTR 9. So once if you can able to complete, once if we can able to fill and can able to have the data for table 5 of the GSTR 9C, then 60 to 70% of the 9C work is over. So that is the reason I am going to explain this table 5, every table 5A to 5P, 5QR also. Till the time everything specifically, what all the things will be added, will be minus, deducted, everything line item wise, which we are going to discuss table 5. Once table 5 we understood, then entire 9C will become easy only. Okay, before explaining this entire table 5, what is this 9C basically? The structure of 9C is simply, we should understand in a simple way that he is asking here, the department is asking in the format that we should reconcile between the two figures. What are the two figures is asking? One figure which will be there in the annual audited financial statements, which is like statutory audit report or the audited financial statements. There, all the figures will be there, right? So that amount you will take and then try to add or minus or deduct to the financial statements and then arrive to GSTR 9 figure. GSTR 9 figure is what? Till now we discussed, no, whatever we discussed, that is what GSTR 9 figure. So to arrive to that GSTR 9 figure, we will start with the audited financial statement figure and then try to add minus and everything and try to come to reconcile or match with GSTR 9. If at all any difference is there between the financial statements versus GSTR 9, then there will be another table, table 6 will be there. Every table, there are different tables are there. There we are going to disclose the reasons for the differences. That is of the entire 9C format will be. Structure is like we'll start the reconciliation with the audited annual statements figure and then try to match with GSTR 9 figure. If at all any difference is there, we are going to give the reasons for the differences. That is the entire structure of GSTR 9C. If you can understand that fundamentals of the structure of the 9C, what is that he is expecting, we can easily fill this table also. Okay, now we are going to, so from 5A to R, line item wise, which we are going to discuss now. So now the first table 5A. 5A, what is the talking about? Turnover as per audited finance statement for the state, union territory, for multi-state GSTN units under the same PAN, the turnover shall be derived from the audited financial statement. What is this means? This is one of the important aspect. All the consultants, all the CAs, whoever is filing and filling and filing the GSTR 9C, this is the important aspect. What is this? For to file the GSTR 9 and 9C, okay, we have to get the state-wise TB, state-wise reconciliation, state-wise turnover details, ledgers, state-wise ledgers, and wherever you have the GST number wise, GST number wise, state wise, we should get the details and accordingly fill those figures in this table 5A. That is important. Before starting the 9 and 9C workings, we should get the state-wise TB, state-wise reconciliation between the ITC, input, output, turnover, everything has to be done state-wise only. Okay, because of late some of the financial statements maybe not having properly the state-wise details in the PDF version of the signed financial statements, but we have to get the Excel version of the financial statements. There most of the time all the statutory auditors will maintain the state-wise details also in the Excel version of the financial statements. That also has to be taken and then accordingly disclosed in these tables. That is what 5A. So once that is done, so table 5, and while filling the table 5A, which is state-wise obviously, then operating income, non-operating income, miscellaneous income, other income, all the things has to be considered. This is one of the very important aspect, okay, because most of the time what happens, okay, only operating income will be taken or the direct revenues will be taken in the table 5A. No, from the audited financial statements or from the notes also you can go and state-wise bifurcation you take, and from there we have to fill all the incomes, operating, non-operating, and then miscellaneous income, other incomes. Every income has to be disclosed in 5A. Okay, and then obviously common financial statements will be there. For that, I just now we've discussed already. Bifurcate that GST wise, bifurcate the turnover and reconciliations also has to be maintained, and that is what 5A. And then 5B, which I've said, which is optional as of now. What is this 5B? 5B is unbilled revenue. Okay, unbilled revenue 5B will be unbilled revenue at the beginning of the financial year. Again, if you see 5B, there will be another column where it is there in 5H. 5H will be unbilled revenue at the end of the financial year. Similar ways, 5C will be unadjusted advance at the end of the financial year, and then 5I will be unadjusted advances at the beginning of the financial year. So those are vice versa transactions basically. Okay, once that is done, what is this unbilled revenue? Unbilled revenue will be, unbilled revenue could arise due to accounting standard complaints. Unbilled revenue which is invoiced with GST should be added. Okay, as of now it is optional. If you don't have the information with respect to that, you can skip. But if you have the information, wherever invoice on which GST, invoice with GST is there for that unbilled revenue, then only you will add, otherwise ignore. Okay, once that is done, table 5C. Next table will be table 5C. Unadjusted advance at the end of the year on which GST paid. What is this? While explaining GSTR 9 itself, I said with respect to services, advances with respect to services only GST is applicable. For goods, it is not applicable anyway. Advances with respect to goods, GST is not applicable. Okay, to services only applicable. That is what we are going to disclose in this table 5C. Wherever unadjusted advances at the end of the year. Okay, example, in this year, example, while filing GSTR 9 and 9C of 23-24 year, 23-24 year, advance is there in that year, GST has been paid on that services. Okay, and then, but that's not recognized as an income or revenue in the financial statements. Okay, advance is there, but income is not recognized in the financial statements. Those kind of advances are there, and that GST has been paid year-end advances. Okay, year-end advances. Those things only to be added. Wherever advance is there for the services, GST paid, but income also recognized in the same year itself, then there is no need of adding again, because that might have already came in 5A itself. That is the reason wherever advance is there on that GST has been paid and recognized income in the same year only, then there is no need of again adding. If it is not recognized in that particular financial year, then only this has to be added. Example could be, there is a convention center where advance has been given to book the convention center, and for example 10% of the advance has been paid and booked the convention center in the month of example March month of the 2024. Now on that, in the March month itself, GST might have paid. Okay, in the March month return, GST has been paid. Now that event happened in the month of August. There is a marriage function. That event happened in the month of August. Example, if that is the case, supply did not happen. As per the financial statement, it will be there in the year-end advances, unadjusted advances only. But because the event did not happen, function did not happen at the time of March advance time, that is the reason those things will not be considered as a, or will not be recognized as a revenue in the financial statements. Those kind of scenarios are there. Those things will be added to the 5C table. Okay, then 5D will be deemed supplies, where what is the deemed supply aspect? Under schedule 1 aspects. What is this? If you see what schedule 1, supplies without any consideration to be treated as supply. So that is what schedule 1 entries are there, where related party transactions, where permanent transfer of business asset, where ITC has been availed. So those kind of entries are the related party transactions. So those areas, what you will do? Example I'll give here also. Deemed supply. Deemed supply under schedule 1, which we will cover. In the company or the assessee is having furniture. On that, ITC has been taken at the time of purchase of the furniture. After 4 years of usage of the furniture, the assessee felt, or the taxpayer felt, that this furniture has to be replaced. He don't want to sell under the second market and all. He want to give it to donation. Obviously, once it is a donation, it is like a without payment of any consideration only. Zero amount the assessee is going to get. Even then, that will be falling under Schedule 1 category of the first entry of Schedule 1. Then in that kind of a thing, taxes has to be paid. Okay, those kind of a turnovers are like stock transfers, where stock transfer will be there, taxes will be paid from Telangana state to Andhra state, where the stock is transferred from Telangana to Andhra. GST has to be paid at the time of stock transfer itself, but that will not be part of your financial statements, because in the consolidation of the financial statements, that will be removed, automatically knocked off. Financial statement will not have, but that amount will come in your GST returns, which will come in your GSTR 9 also finally. So to match with that thing which is not there in your financial statement, which is there in your GSTR 9, that has to be added. That is how this entire tables will work. Whatever is not there in your financials and which is there in GSTR returns, that will be added or deducted, has to happen according to the transaction. Accordingly, you will try to match the financial statements figures with the GST returns figure or 9 figure. Then you will try to reconcile those things and try to understand what are all the reasons for the differences. That is the entire intention of the table 5. And table 5, one more thing we should remember is that that is this reconciliation is going to happen for the gross level turnover. It is not for taxable turnover. That will be there in table 7, which we are going to discuss later. Table 5 is about the gross level turnover. And then 5D also over, deemed supply. 5E will be credit notes issued after 31st March for the supplies of current finance. Generally, this kind of a scenario will not be there. If it is there, the table will be table 5E. And table 5F will be trade discounts accounted, and later also we'll discuss this about this trade discounts and all, like section 15, where trade discounts will be given in the invoice and which will be accounted in the financial statements, then no problem. If it is not in the accounted in the financial statements, then how to disclose and all, which will come in table 5F. And also one more table is going to come with little later. And then table 5G, not relevant, which is redundant, which we already discussed. And then table 5H will be unbilled revenue at the end of the year. Unbilled revenue at the beginning of the year, 5B, which we have added, and unbilled revenue at the end of the financial year has to be deducted, which is 5H basically. And then 5I is unadjusted advances at the beginning of the financial year has to be deducted. And similar vice versa transaction or the reverse transaction, where we have seen in table 5C, where unadjusted advances at the end of the financial details we were given. 5I will be unadjusted advances at the beginning of the financial year will be deducted, so that net to net, whatever advances with respect to current year only will be going to the GSTR 9C figure. Okay. Yeah, once that is over, 5I, then we'll go to 5J. Credit note accounted in the financial year but not allowed in GST to be added. Why we are adding this? Credit note accounted in the financial statements, which means financial statements turnover might have been reduced. Okay, but if it is not allowed in the GST, then it has to be added to the plus has to happen added, so that you will arrive to GST 9 figure. That is the reason. Similar way, table 5K, supply of goods by SEZ to DTA to be deducted. Why it has to be deducted? SEZ supplies to DTA will be treated as import, right? Though it is within the India, but SEZ is practical purpose and everything, it is outside India. So that is the reason any goods supplied, goods only, okay, not services, goods supplied by SEZ to DTA unit, then this will not be, it is to be treated as an import of goods, right? So that is the reason it will be deducted. Okay. Yeah. So once that is done, table 5L will turnover of composition, which is not relevant anyway. And then table 5M will be adjusted on account of section 15. What is section 15? Section 15 about the transaction value, valuation and all, right? So wherever related party transactions are happening, and as per accountant, I've given here, adjustment on account of section 15 to be added or deducted. Okay, both plus or minus can happen in table 5M. Added cases. What is the adding cases? Add those where taxable value of GST is more than accounted. As per accounting financial statements accounts, taxable value as per GST is more, then add to the 5M. If it is taxable value is less as per GST compared to the accounts, then deduct to table 5M. That is how it has to be seen. Like pure agent expenses, transactions with respect to related party, GST on construction paid where 2/3, 1/3, all these aspects will come under this valuation aspects. All the things you can add in 5M. Wherever taxable value as per GST is more compared to accounts, then add. If it is less, taxable value is less than accounts, then deduct. Okay, that is how this entire table 5M will work. And then once that is done, we will go to the next table, that is table 5N. Foreign exchange fluctuation, gain, loss, which will be there in your financial statements, right? Then accordingly, if it is a loss, gain, then accordingly add or deduct has to happen to the table 5N. Then once this is done, table 5O. This is the last table in table 5 where adjustment on turnover due to reasons not listed above to be add or deduct. Okay, this is very important table. Like in our CA final, or in at least not in CA final, IPCC time and all, CA inter and all, what we used to do whenever we are not able to reconcile balance sheet, we used to add one figure, balancing figure type, and then matching those financial statements. So that kind of a, yeah. So Amit, yes sir. Amit sir, whatever question you are asking, it is yes. Yeah. So now 5O is not a balancing figure. That is what we should understand and remember, because whatever the details which we are going to disclose in 5O is not a balancing figure. Whatever the reasons not listed above all 5A to N, then only those figures which has to be disclosed in 5O. But it is not a balancing figure. Wherever we are not able to get, not able to understand, identify or reconcile, that cannot come to 5O, because based on this 5O also, department is asking specific clarifications, specific details also. What you disclose something in 5O, I don't know what is this, then please give me the details. That is the reason it is not a balancing figure. Whatever we are going to disclose, like Ind AS related duty drawback, dividends, all these kind of a goods and approval, if at all these kind of aspects are there which are not covered in above tables, we can disclose in 5O. But for that 5O details, we have to have a specific data to be maintained, and specific information has to be there, and each line item wise Excel sheet has to be maintained. Whenever a department is asking 5O details, we should be able to give the data to the department, and then so that they will understand. Otherwise unnecessary problems will come. If you put the punch-in figure, whatever the difference which comes, which is there and the above tables, if you put punching figure or balancing figure in 5O, which we are going to face litigation later point of time. So that is the reason whatever amount which we are disclosing in 5O, specific clear cut Excel working and document and data has to be there. Okay, so once that is done, 5Q will be that turnover derived from the GSTR 9 purpose. 9 figure will come in 5N. You can see here. Yeah, so 5P will be the total of 5A to O, and then 5Q will be turnover as declared in GSTR 9. Whatever till now we filed, we filled the GST 9 figure, that will come automatically in 5Q. And then 5P versus Q, unreconciled turnover will happen, Q minus P, and then table 6 will be there, which is reasons for the unreconciled turnover. So that is there. So then what is this table 5? Basically turnover with reconciliation of turnover of the audited annual financial statements with GSTR 9 figures, and this reconciliation is on gross turnover basis. Okay, it is gross turnover basis. So once this table is over, we can go to the next table, that is reconciliation of taxable turnover, that is table 7. Okay, first table which we discussed about gross level turnover wise reconciliation we have given, and then next table reason any differences unreconciled turnover is there, we will give reasons in table 6, and then next table will be table 7, which is taxable turnover reconciliation. It's basically like we have seen no in table 5 table 4 of GSTR 9, table 5 of GSTR 9 where with taxes without taxes, right? Similar way, maybe similar way. That's how we can understand table 9c tables in table 5 and 7. Okay, so now 7 will be taxable turnover. He want to understand after filling this table 7, he is going to get what are all the turnovers on which only taxes paid. That he will understand. So that is the reason these details has to be filled here. So the 7a will be automatically will come from 5p above. Obviously 5p. 5p is the turnover, all the entire turnover from the finance statements and 9. That automatically will come from 5 table 5, that is 7a, and then 7b will be value of exempted supply, nil rated supply, non GST turnover, no supply details, everything will come in 7b. And then 7c will be zero rated supply without payment of tax. 7d will be supplies on which tax to be paid by the recipient on reverse charge basis. And then 7e will be taxable turnover as per adjustment above. Above means what? And 7a minus bcd, which means effectively after reducing A, B, C, B, C, D from A, then you will actually get the taxable turnover on which taxes actually has been paid. That turnover he will compare in the next table, which is tax payable versus paid table. For that reason, this wherever tax is not applicable, those things exempted, nil rated, zero rated supply, reverse charge basis, whatever tax is paid, everything will be removed from 7A. Again, the figure will come from GSTR 9, taxable turnover, that table 5. From there, you will get in 7F. And then again, one more reconciliation will happen. If at all any differences, if it is matching, everything is fine, no problem. Then if it is not matching, then unreconciled turnover will come, which is F minus E. Ideally, if you do proper reconciliation and properly filling the entire data in 9c of table 5, whatever difference comes in table 5 q, okay, same amount will come in 7g basically. So if you can able to get even difference or the match also, anyway, 0 or any difference also comes. If it is in both the places same, then we might have done something properly, correctly. Then accordingly, you can start identify the unreconciled turnovers. And while filling this table, say table 7, where 7, B, C, D and all, because this is exempted, nil rated, all the turnovers which we are going to disclose here, conditions with respect to exempted supplies, export, all the things has to be properly verified one more time. And then accordingly, if at all any exemption which is not applicable, exemption, but still SSC has been availed and tax accordingly not paid, then while filling this table, we should be able to recommend the client if based on those conditions which are applicable to those exemption notification, you did not satisfy. That is the reason this exemption is not applicable. You may have to pay taxes. Accordingly, liability, one Excel sheet or something like that, we have to give that liability sheet to the assessee and accordingly ask the taxpayer to pay. So that is the reason while filling this exemption details, assessee might have applied as per his judgment and his understanding of the law, of the conditions and all. But we as a consultant, we should verify one more time whether that actually exemption is applicable or allowed or not, nil rate is applicable or not, concessional rate is applicable or not, and accordingly fill this. Okay, so once that table 7 is over, then 8 table will come. That table will have unreconciled reasons for the unreconciled turnover with respect to 7G. Okay, so once that is done, then first reconciliation, what is that which we did? for the GSTR 9C. First one is about gross level turnover. Any differences are there? Reasons we have provided. And then next table will be table 7, where we have done the reconciliation with respect to taxable turnover wise reconciliation. If at all still there any unreconciled taxable turnover there, then table 8 reasons we will provide. And then next table will be reconciliation of taxes paid. Here also, as per books, all the rate-wise ledgers, rate-wise reconciliation has to be taken and filled in this table 9. And then again table 9Q. If you see there, you have total amount paid as declared in annual returns. Okay, as per annual returns, the taxes paid also there, na table 9. That as per table GSTR 9, that figure will come automatically here. That comparison will happen as per ledgers and as per financial statements, taxes paid versus taxes paid as per GSTR 9. If at all still any difference is there, if it is matching, well and good, no problem. If it is not matching, then unreconciled payment will be there. That has to be paid through DRC 03. Okay, that is what I think I've given in the in this slide, where reconciliation of taxes paid. Reasons could be what? For the reasons tax paid and tax payable could be interest, penalty, late fee considered in GSTR 9, not auto-populated in table 9Q from GSTR 9. Okay, where we pay interest, penalty and all, if it is not auto-populated, then a reason difference will come. Then we have to identify that reason and then accordingly give the reasons in the below table. Okay, then other reason could be, it is only exhaustive list. I did not give any. It is not a it is not inclusive. It is not an exhaustive. Basically, I have just given indicative list. Okay, this could be the reasons for the differences. Sorry. Then outward RCM additional liability, if at all anything is there, not forming part of the books. While doing this 990 reconciliation, we identified and told the assessee that there is a RCM liability which you missed, or there is an outward liability which you missed, that additional liability which we recommended, which is not for part of their financial statements. Books, it is not there. Then we recommended. That may be the reason for the difference also, the tax paid versus payable. And then additional liability arising from the ITC reversal also. There is ITC reversal, if at all anything is there. Because of that, any additional liability come, then that also could be the reason for the differences in tax paid versus payable. And then negative ITC as per table 4C of 3B. Okay, that is also a reason, that could also be a reason for difference. Or maybe incorrect or unadjusted entries passed. Okay, adjustment entries passed in the books of accounts relating to other periods also possible. This could also be a reason for difference in the tax paid versus payable. So once this is done, the table, first we have done the, I am repeating this once again, the entire structure of the 9C. The first step will be gross level turnover reconciliation with financial statements and GSTR 9. Second reconciliation will be taxable turnover wise reconciliation with GSTR 9C, financial statements versus GSTR 9. And the third will be tax paid versus payable versus paid reconciliation, books versus GSTR 9. And that is the third level of reconciliation. Fourth reconciliation will be part 4 is the reconciliation of input tax credit, ITC. Again, if you see the ITC details with respect to GSTR 9, little tricky, but if you see in the 9C figures, which is little easy to fill, because it is asking consolidated figures kind of a thing in terms of specific state only, obviously specific state or specific registration, but it is function figure, not like specific where there are so many tables in the GSTR 9, but 9C, those things are not there with respect to financials. You can see this. Table 12, it is reconciliation of net ITC. 12A figure which will come from the financial statements, obviously state wise, and union territory, state or GST number wise ITC has to be taken from the audited financial statements. Okay, that is 12A. 12B and C, which I think I referred in while explaining GSTR 9 also, where 12B and C are mandatory for the from the last 21, 22 onwards, mandatory. What is this? 12B will be ITC booked in the earlier financial year, claimed in the current financial year. 12C will be ITC booked in the current financial year to be claimed in the subsequent financial year. What is this? As per the financial statement in 12A, we will take the ITC details, right? From the financial statement, whatever is there in the ITC ledgers, which we are going to take in 12A. So after that, what happens? What is the possibility? In 12B, what is trying to say? There is a possibility of 2022-23 year booked ITC in that financial year, but taken ITC in GST returns in the current financial year, which means 23-24. So what is 12C will be ITC booked in 23-24, but I taken in claimed in 24-25. So basically, last year ITC taken in current year, and the next one will be current year ITC taken in the subsequent financial year. So those details has to be added or minus here. Once that is done, then 12D will be A plus B, obviously A ITC as per books, and then B will be this year taken but booked in last year, earlier financial year. Those two things will be added, and C will be booked in this year but not taken in this year, right? That is the reason it has to be removed or minus. Then you will try to arrive for the ITC claimed in annual return. Automatically figure will come. Then the unreconciled ITC E minus D will be there. Yeah. So again, reasons will be provided late in the next tables. Table 13, that is. And again, the one after completing the table 12 and 13, and then table 14, which I've said as of now, it is optional. It is not a mandatory table, which is asking the details of reconciliation of ITC declared in annual returns with ITC availed on expenses as per audited financial statements or books of accounts. Okay, this is basically ledger wise. Maybe broadly we can say that way. Ledger wise or expense procurement basis value and ITC details matching has to happen with GSTR 9 figure. As of now, it is optional. Please ignore this. And because it is very difficult to fill these expenditure wise ITC details. Provided you have specific accounting also properly is having everything expenditure wise ledgers, everything is there, ITC details, then it can be filled, but it is optional as of now. Since it is optional this year, possibility is there for the next year onwards, this table also may be mandatory because as I explained that for income tax class 44 and all, right? So those things 3CD and all disclosures, because there it is mandatory. Here also they said as of now it is optional. Next year possibility that this also can become mandatory also possibly. If that is the case, this year onwards we should recommend as a consultant to the assessees and the taxpayers, as a GST consultant, we should ask the clients to maintain the expenditure wise ITC at least this year onwards, so that whenever this becomes mandatory, we can easily fill these details also. That is the recommendation. Yeah. So once that table 14 is over, then part 4, additional liability due to non-reconciliation. So this table, if you understand, gross level turnover not satisfied, there is some unreconciled item, you give the reasons, and then taxable turnover wise reconciliation you give, still you have any unreconciled taxable turnover, give the reasons, then you do reconciliation for taxes paid, payable versus paid, still any unreconciled item, give the reasons, and then later ITC differences, reasons, and then still is not satisfied. One more table like insurance type, there is one more table has been added, which is additional liability due to non-reconciliation. If at all any those reasons, anything you gave, and we are paying now, those tax rate wise and all, we should disclose in this table part 5. Okay, yeah. So generally this may be not there, but if at all anything is there, additional liability and all, which can be disclosed here. So with that, I've finished the explaining about the tables of the GSTR 99C, everything. Now we are going to discuss about some of the important aspects to verify as a consultant. Okay, as a practicing shadow accountant, as a consultant to the assessees, while filing GSTR 9 and 9C, while filling the GSTR and 9 and 9C after later we will file, we have to verify some of the important aspects. So those things I've given indicative list here. So I will just go through all these aspects. Okay. So all these aspects, whenever you do your client 9 and 9C, please try to ensure or verify these aspects while filling and filing GSTR 9 and 9C. What are those important aspects? I have given it listed down here. Review exemptions, concessions claimed, because sometimes client or assessee may take the exemption as per their understanding. We should actually examine whether that exemption is properly taken, whether that exemption is applicable, available or not to the assessee and all. Accordingly, then after verification only, we have to fill 9 and 9C. And then review of supply transactions as distinct persons, related party, valuation and all. These are also very important aspects, especially, so obviously this related party valuation will be different from the financial statements, right? That is the reason those transactions has to be verified properly. Nature of supply, mixed versus composite supply, if that thing is very important, because sometimes client or assessee may consider as a composite supply, and rate may, if at all it is applying the composite supply, the rate applicability will be principal supply in the composite supply. Okay, so if the department says it's not a composite supply, it is a mixed supply, then rate will be highest rate in the entire one or more supplies which are there in the invoice or the contract. So if that is how department is treating differently compared to the assessee treatment, then those kind of a transactions, wherever scope is there to verify, we have to verify and accordingly check whether it's properly that the classification of composite or mixed supply has been done or not. We have to verify, and accordingly taxes paid or not, we have to verify that. And the next will be advance receipts and implications in GST, which already we've discussed. And the export conditions and documentation also we've discussed. Classification and rate of tax adopted, this also we've discussed. These things has to be verified. And sale of fixed asset, including used motor vehicles. This I think we did not discuss. I will explain little further here. So whenever financial statements, if you verify while doing 9 and 9C, if at all anything you identify as a sale of fixed assets or profit on sale of fixed assets, any line item in this way, we have to categorize those sale of fixed asset related things into two categories. What is that one category? First category will be motor vehicles. If it is a motor vehicle fixed asset sale, then it will be the rates and everything will be applicable based on that notification 8/2018, where marginal scheme will apply, right? Where written down value as per income tax minus transaction value, and then if it is a profit, then only margin is positive, then only taxes will be paid. If it is a loss, then there is no need of payment of taxes on the sale of motor vehicle. If it is a loss, that is applicable. That marginal scheme 8/2018 notification is applicable only to motor vehicles, like passenger motor vehicles kind of a thing only, not for all fixed assets. If other than motor vehicles, then one more important thing which we have to, on the sale value, just like that, okay, other than motor vehicle, whatever transaction value on that some fixed asset or machinery has been sold, if at all rate is applicable 18%, pay that 18% and then leave it. That is now we should not do. There is one more section we have to consider while verifying this sale of fixed asset category, other than motor vehicle only I'm talking about. Okay, what is that section? Section 18.6. What is that section 18 talks about? Section 18.6 talks about wherever these fixed assets are sold and that ITC has been taken, 5% per quarter type we have to calculate. Eligibility ITC, how many quarters you use that asset, that to the extent of that proportionate ITC only eligible, and then balance percentage will not be eligible per se, and that is one calculation. I will give the example also. Okay, it is little confusing, but I'll give example. Okay, and then second calculation will be sale value on that example in case 18% on that GST. Whichever is higher has to be paid. What is this which I am talking about? This is example. In the case where a machinery has been sold and that ITC has been taken at the time of purchase after usage of 2 years. Okay. Now we are selling. So if that is sold for example 1 lakh rupees asset has been sold. On that 1 lakh rupees, if the GST rate is applicable at the rate of 18%, GST tax amount will be 18,000 rupees. That invoice will be given to the vendor, customer, whomsoever we are selling that fixed asset, right? That is one calculation. You keep that 18,000 aside. And the next calculation will be this asset has been sold after usage of 2 years, right? Capital good. The 2 years means how many quarters? It will be 8 quarters. 8 quarters into 5%, which means 8 into 5, 40. Okay, 40% of the ITC only eligible. 60% is not eligible. If that 60% of the ITC is coming above, or example in our case, what is that 18,000 we said, no? If that 60% of the ITC where asset has not been used, only 40% of the time only used, that 60% ITC is 20,000 example in our case, then GST has to be paid on 20,000 rupees. So on the transaction value 18,000 is there. Because of this section 18(6) calculation, whichever is higher, 18,000 versus 20,000, higher amount only has to be paid. So in the reverse scenario where that 80% ITC is 10,000 example. So then on the transaction value 18,000 came, on the 18(6) calculation purpose 10,000 only came. Then whichever is higher is 18,000 rupees. Taxes has to be paid, GST has to be paid on 18,000 only. This calculation most of the time, common error which I've seen most of the assessees which they are doing. So wherever motor vehicles, then it is a marginal scheme. Wherever fixed asset, then transaction value versus 18(6) calculation, whichever is higher has to be paid. That has to be taken care. We have to recommend this calculation to the assessees. Most of the time, I've seen the error has happened all the time. Either short or excess taxes has been paid. So that has to be properly verified before filing GSTR 999C. And then sample removals, supply schemes, percentage schemes, volume discounts, all the aspects has to be reviewed one more time. If at all on samples, whether they actually paid or not. Okay, if at all any free gifts are there, ITC has been removed, ITC has been reversed or not. Any destruction of material is there, expiry goods are there. Those things, ITC has been reversed or not, type of supply concept properly followed or not, if at all not followed, any interest implication is there, all the things has to be verified. Okay. Yeah. So then the next point is again one important aspect to verify with respect to procurements. So basically ITC related aspects which already I covered: exemptions, commission, concessions, claim of ITC, fulfillment of conditions, restrictions, 17(5), doubtful credits, temporary, permanent reversals, wrongly one state ITC has been taken in another state, CGST, SGST ITC taken in CGST, SGST credit taken as IGST credit. All the things properly has to be verified. IRCM liability paid, whether ITC has been taken or not, paid but excess taken, but not paid RCM but taken excess. All the things, year-end procurement related aspects, all the things has to be verified one more time before filing GSTR 99C. If at all anything extra liability comes, reversal has to happen. That has to be recommended to the SASI. and a few common issues and possible solutions. There are some common issues also I've given here, possible solutions also I've given in this slide. So wrong type of GST on onboard supplies to POS, where wrong type of tax paid on outward supply. What is that example? Example could be CGST, SGST has to be paid by associate paid by mistake IGST. Okay, in that case, what to do? Benefit of section 77 anyway is there, which means right tax has to be paid, wrong tax has to be refunded. Okay, but in this case, if we are doing voluntarily, then all these things will not be there properly. Only we will disclose and everything. And what is this benefit of 77 and similar section in IGST is section 19. These two sections are, if it is held that wrong tax is paid, then right tax has to be paid, wrong taxes has to be refunded, and then interest will not be applicable. That is what the benefit of section 77 and section 19 of IGST. 77 is CGST, section 19 is about IGST. And there is one Kerala court judgment also I've given, Saji versus Commission of GST, where court ordered tax official to transfer the tax paid under wrong head to right head also. That judgment is there. You can refer that wherever this kind of a scenario is there. And wrong type of GST under RCM. Obviously, this is doubtful. Section 77 is doubtful to consider because wrong taxes collected. Okay, wrong taxes collected only to be refunded. That's how words are there in 77, right? So that is the reason this RCM is not collected. It's paid by the assessee, right? That is the reason it is doubtful, but still it can be tried. Okay, wrong type of ITC, which I've said, IGST, CGST, SGST, vice versa, any taken, utilized and all, then accordingly this adjustment, everything has to happen. And that we have to recommend to the assessee properly. And then, so few more common issues I've given, possible solutions also. GST on goods not exported, where we know that wherever goods are not exported within 3 months, then GST has to be paid, right? So that whether actually based on the documentation and all, export documentation and all, shipping bills, let export order and everything. So whether actually the goods are exported or not, we have to verify and see whether the goods are exported within 3 months or not. If it is not done, then we may have to recommend to the assessee that there will be liability on those things. If it is a service aspects, the foreign currency has to be received within 1 year. If it is not received within 15 days of the expiry of that 1 year, then GST has to be paid on the unrealized export consideration. FIRC is not there, export proceeds not received, then GST has to be paid. So those kind of things, those kind of aspects with respect to export also, goods and services has to be verified and accordingly reviewed. And then Rule 42 on exempt incomes, and then obviously IC sales, there's no need of doing Rule 42 reversal. Sale of duty scripts also, there's no need of duty scripts. ITC reversal is not there. Initially, there used to be some confusion and people reversed it. Assessees or clients reverse the ITC for the duty scripts because the duty scripts are nil rated goods as per the exemption notification. That is the reason some assessees reversed it. Now that is no need of reversal. That later it has been clarified. And then interest income, anyway, which is there as an explanation to the Rule 42, ITC reversal is not required, though it is a interest income is a exempt supply. Okay, interest income is like FD, interest, these kind of things. Okay, and sale of security. This is important. Sale of security. Most of the time as a consultant, we should recommend this one aspect which most of the assessees are missing to consider this. What is this? Sale of security. Securities are neither good. If you see the definition of good in the GST law or service definition, both the cases securities are excluded. Okay, if that is the case, we will obviously skip from the outward taxable point of view. Wherever sale of securities are there, like shares are there, sale of shares are there, that income is there in the financial statements, we may ignore from the outward tax point of view. But we have to remember from the inward or ITC reversal point of view, 1% of sale value of that securities to be treated as exempt supply for applying the Rule 42 common ITC reversal. That is important. So that most of the time, wherever sale of securities, sale of shares are there, investments will be there, sales will be there, those kind of things has to be 1% sale value has to be treated as an exempt supply. Accordingly, apply the rule 42. What is this rule 42? In simple way, common ITC which is used for both taxable and exempted supplies, okay, into exempted turnover by taxable turnover. For in the case of real estate, it is common ITC into exempted carpet area by total carpet area. That is for real estate. For all other people, it is a turnover only. So for calculating this rule 42 common ITC reversal, if at all, if you find any sale of security in the financial statements, not from this outward supply point of view, maybe not having any impact, but from the ITC reversal point of view, 1% of the value, sale value, to be treated as exempt supply for the purpose of Rule 42 and Section 17, and ITC reversal has to happen. So that is done. Then issues in GSTR 9C. So difference in outward supplies in GSTR 1 and 3B. I have given here scenarios where there is a outward supply point of view, if at all any difference is there, GSTR 1 versus 3B. If 3B is more than GSTR 1, file 9 GSTR on the basis of 3B. Okay, if GSTR 1 is more than GSTR 3B, then if the client is willing to pay taxes, then pay taxes whatever is there under DRC 03. Okay, if GSTR 1 and 3B are matching, then still if returns are less than books, then this is also important. 1 and 3B is matching, then there is no need for me to check anything and ignore and whatever the values are there as per 1 and 3B and accordingly file GSTR 9. No, we have to compare that GSTR 1 and 3B figures with returns filed with the books of accounts. If at in the books there is a turnover which is missed to considering both in 1 and 3B, and accordingly those 1 and 3B may be matching, but actually less tax is paid, no. So those kind of things also has to be verified one more time, and then if at all it has to be paid, then recommend the assessee to pay under DRC 03. Okay, so those are the issues which are there, and further some more issues I have given here. Department notices asking details of regarding 5.0, which I have discussed already. 5.0 department is asking we should have the proper documents and everything, details, Excel sheet and everything, whatever the values, figures which we disclosed in 5.0, we should have the documents, details, sheet and everything. And then proper reasons for 9C differences also, we should have the reasons. Table 12 we already discussed, and then table 12B, C and everything we have discussed. Proper disclosure, I think that is what is the later point. Next point also same. And deemed supply cross check turnover to be adjusted in 5D, that is also we've discussed. Yeah, rate-wise bifurcation of taxable supplies and reverse has to be given. These also has to be verified issues. Most of the time, these are the issues which we have seen commonly. So those things has to be taken care while filling and filing GSTR 9 and 9C. So in the last slide which I have given, do's and don'ts while filing GSTR 9 and 9C. Do's. First, fill accurate data. Amendment is not allowed once filed. That is the reason. Fill the accurate data and file the accurate data only, and while doing GSTR 9 and 9C. And then perform invoice-wise level reconciliations. And then ITC register capital goods bifurcation required. Maintain GSTR 9 and 9C workings with links to all the relevant data. I've given bold color here. Okay, why? Most of the time we do 9 and 9C workings and everything will be there, and filing also will happen, and we will keep the data somewhere. That person, whoever did that entire workings and all, as a consultant I'm saying, as a practicing CA I'm saying this, most of them, even I've seen in my office some cases where that links and all properly maybe not there, server may. That is the reason what I'm trying to recommend here. We should have that entire data, workings and everything with links and relevant data, workings and everything, Excel sheet, everything to be shared and zipped, filed in the server, and then at one place only we have to do. Otherwise, what is happening for the last 4-5 years, what we are seeing, whenever department is asking data with the client will say, so sir, data is not there, sir. please send. When we see that links are missing, we will feel this is a wrong data, wrongly filed 990 and all. We may blame blame against each other. So that is not recommended. So that is the reason this is important. After doing entire work, hard work, entire team will do. We should save the data also in server and proper place or cloud or whatever it may be, with all links and relevant data properly. So that is the humble request to all the consultants whoever doing 9 and 9C, and also the whoever other CS whoever is doing to that company wherever they are working, and maintain the details of ITC claimed, reversed, reclaimed if the taxpayer fulfills the conditions. And table 8 of GSTR 9, 2B versus 3B, spillover transactions, everything we've discussed already. Don'ts. Do not forget to file nil return. This is the one mistake or error sometimes we do. What is that? The assessees we do that wherever the turnover is there, wherever the effective active registration or active transactions are there, in those states only we tend to file the GSTR 9 and 9C. But wherever nil registrations are there, for some reason registration still active, but it is not having any turnover, nil also we should file, because if it is not filed, there is a possibility of the late filing fee for 9 and 9C. So that is the reason, even for nil returns also, we have to verify one more time based on the PAN number, the GST number, what are all the states that it is having GST number. For all the GST numbers of the current relevant financial year, if it is 9C is applicable, even nil return also, for those other nil return states also, GST has to be, GST and 99C has to be filed. And then do not file without verification, as returns cannot be revised. Before filing, one more time, verification has to happen. And the next slide I have given departmental issues and solution, which in our above discussions only we have covered all the aspects, 9 of table 14, 5O, table 12B, 12A, all the things has been already discussed. So with that, so I've completed my session. Hope my voice is clear and everything is okay. Hope you got the desired output, desired understanding of the GSTR 9 and 9C. So with that, I'm open for the Q&A, and you can share in the chat box. I'm not sure whether I can reply in the chat box or not. That it is disabled or able, I don't know, but I can see the comments that is there. Yeah, we can start. If I can, I can reply to that. If not, there also my mail ID. Please make a note of my mail ID, which is there, subbareddy@hnaindia.com. That is my mail ID. If you share the any query with respect to that, we will reply. Me or my team of my team people will reply. Obviously, from my mail ID only it will come. Yeah. Yeah, so WhatsApp I can't reply because today only my WhatsApp got hacked. It seems that got uninstalled. But anyway, please ask a question, sir. Any questions are there? I think it is able. It seems it is able. I think I can answer in the chat box. Looks like yes, I can do that. Yes, please put your questions in the chat box. We will give time, maybe 5-10 minutes for the question answers. But from my side, session is completed. So some of the questions which I can read as of now, those things I will try to answer. Above things I'll see later. What is the turnover for second-hand dealer as per GST? Second-hand dealer turnover means what, sir? This is turnover is same only, sir. Everyone is turnover is same only. Aggregate annual turnover and everything is same. 5 crores and all, everything is same. Yeah, mobile purchase for 50K, discarded after 3 years, reversal of ITC not viable as per rule 86, not 86, sir, I'm talking, okay. After 3 years, why it is not viable, sir? I don't know. If at all that mobile is sold for higher rate, not sure whether that it will go for higher rate and all. But section 18(6), you can apply quarterly, quarter and all. But effectively, if you see the quarter, 5% per quarter means 5 years. Correct, no? 5 years into 4, 20, 20 into 5. Yeah, so 5 years. After 5 years, there is no need. Whatever the value you do, accordingly you can apply. On the transaction value, you can pay GST. There is no need of doing that section 18(6) formula. The whichever is higher will not be there. No, after 5 years, it will be obviously 0 as per the calculation of the quarter, 5% per quarter. And then whatever value as per transaction value only, we will pay. Like Amit sir may be saying it is a scrap, discarded kind of a thing. Possibly, ITC reversal. Okay. So ITC reversal, output tax, two aspects are there. So one is that section 18(6) has to be applied on the transaction value versus 5% per quarter calculation. ITC point of view, if you have the specific identification of the goods destroyed, discarded, all the things, you have to reverse it. Otherwise what happens, that schedule 1 transaction where permanent disposal of business asset, where ITC has been taken at the time of purchase of this mobile, then output tax has to be paid. Either one way, either it is in ITC reversal or otherwise in schedule 1 transaction, taxes has to be one way or the other. We will be in that loop. We may have to comply that. Sale price minus purchase price. If at all you are talking about the section 18(6) formula, sale price, it is transaction value obviously, minus purchase price. No, that is not the purchase value which we are talking about. We are talking about the ITC. ITC taken at the time of purchase into number of quarters, that is eligible. The balance quarters, like example, in my example which I said is about in my example I said 2 years so used. After 2 years you are selling, balance 3 years it is not used now. For that case, 3 years into 4 into 5%. So that has to be calculated versus the GST on the sale value, sale price which you are referring to. So whichever is higher has to be, taxes has to be paid. It is not sale prices minus purchase price. But in the case of motor vehicle, sale prices minus WDV value has to be seen. If it is a profit, GST will be paid. If it is a negative, which means less loss, then no need of GST on the sale of motor vehicles. That is section notification 18/8/2018. We need to disclose as per the branch wise turnover in 9 and 9C. It is not, we can't say it is a branch wise, it is GST number wise, basically. If the branch is having different states, then different registrations, but we have to say it is like GST number wise, basically, not branch. For example, in Telangana itself, we have 4 branches, one GST number only, then no need of disclosure, different GST and 990, right? One GST and 990 only will happen for Telangana. If at all in Telangana itself, we have 2 registrations. Example, different verticals registration you took. One is hotel, another one is like some different business where some other business is the real estate or something like that. 2 registrations are there, even in the same state. You can do 2 990s. Accordingly disclose. Amit sir says there may be assets having life less than 5 years and reversal of ITC by 5% per quarter not viable. Sir, it's not like viable thing, sir. We have to calculate, for example, that calculation is about quarter wise. Okay, if you say mobile, then that calculation is not viability point of view. It is from the compliance point of view, because they want to consider and give the ITC long-term basis, 5 years basically. That is the reason 5% they gave. If you see this section, sir, section 18.6, in previously service tax semi credit rules, if you see there, it used to be for all assets other than computers and all, it used to be first year will be 2.5%, 5%, and then 2.5%, and later years will be 1%, 1% like that. In that case, it used to be 10 years also used to be there in semi credit rules. So, but in the GST, they said everything, no computers, no other assets difference, everything is 5% only, like that they gave. Yeah. Hope I've answered. Still any questions or anything is there, you can put your questions to my mail ID, subareddy@snindia.com. You can drop in my mail ID. Hope this gives some insights to the GSTR and 999C. And thanks for the opportunity for the association or the society to explain my thoughts in the GSTR and 999C. Yes, we are all consultants, and then our CS, where we have to help the clients. It's not about the discussion about the topic. It is about the quality work which we do to the clients. So that is the reason I will share this presentation with Lakshmi madam, and she can share with the members wherever they want. Yeah, thank you. Thank you all. Thank you all. Bye. Have a nice day. Thanks for the opportunity.